So I already have an old vehicle. So for me to get the new vehicle, also I need to get rid of my old vehicle, isn't it? So this is my old vehicle and this is my beautiful new vehicle. So I am going to receive the new vehicle and I am going to give away old vehicle. This type of arrangement is known as
consideration.
Non-cash consideration. If you really think about a time period like 100, 200, 500 years before, we discussed about something called barter system. Correct?
Yes, correct.
It's not barter system, no? That's different. This is different, huh?
Barter system. Yes.
No, barter system
barter?
is very dangerous. You know what is barter, right?
No, I don't know what barter.
Habibi, wallah ya hinta mushkil. I will show you what is barter now. Then you will be very shocked. Allahu Akbar, Allahu Akbar. Hada barter.
Oh, okay.
So that's an Indian name.
It's not in our country, so I'm not really familiar with this, brand. So don't blame me.
Anyway, what I'm saying is, so if we are not talking about barter system, we are talking about barter system.
Okay. I got it now.
Now if you happen to deal with barter system, it's very dangerous, right?
Yes.
It's very dangerous. Then sometime in parliaments, sometime in huge political meetings, they exchange this.
You mean it has many use?
Yes, many multiple use.
Okay, now I get it.
Very good. You got it. What I tried to mean.
Okay.
So the non-cash consideration all means that it's sort of a barter system. You give up. Let's say if you have to sell this car outright, the total cost of the car, let's assume $100,000, and your old car you can find a buyer for $40,000. So in a non-cash consideration arrangement, what will happen now? You need to book the entry. You need to record in the buyer's book. In the buyer's book, he need to record something called motor vehicle. Already he has brought forward how much? Already how much he has?
100K.
No.
10,000.
Already he has old car, that is 40,000. Correct?
Yes, correct.
Now he wanted to purchase a new car. New car total cost is 100,000. The seller or the showroom agreed to take the old car at this 40,000. See, sometimes they may not ask for 40, even they may ask for 20 or 25 or 35. For the sake of our convenience, we will assume they are taking at 40. Okay?
Yeah.
Now, in this case, brothers, just assume a scenario like this. Old car, new car. I was telling you 40,000 and here 100,000. Presume a scenario like this. Instead of the car showroom buying this old car, the buyer able to sell the car to someone outside. Sell outside and receive cash. Receive what? So this is his cash till. So now he will receive 40. Correct?
Yeah.
If this buyer can find another buyer for his old car and he receives 40,000. Now what happens? He need to pay. How much he need to pay?
60.
Meaning
60,000.
additional 60. In
60,
total, he need to pay
100.
100. So in additionally, he need to pay another 60,000. Accordingly, this car will disappear and this car will appear in the books. Correct?
Yes, clear now.
So do you agree with me that this exercise, the exercise what we are looking here, this circle, do you agree with me? This is something could we call as disposal?
Well,
Is
looks
this,
like
I mean,
disposal.
is
we're in
this
our
a sale of vehicle? Is this a sale of vehicle or not? You buying an outside, you finding an outside buyer and selling your car for 40,000. So can I call this as a sales process?
It is because we
Yes.
sold
So we use a technical term here. The term is
disposal. Yeah.
disposal. And I am purchasing a new car, and that the purchasing new car, we have another technical term. Acquisition. Acquisition, purchase, buying. You could use it any name, but acquisition is more better and appropriate term. So can I call that is an acquisition? Meaning this cycle. Savalala.
Yes, it is an acquisition. You're owning a
Very
new
good.
car.
Now what we're going to do, sorry, Mr. Subes, you tell me, you are saying something. Mr. Subes, are you about to say something?
Yes, sir.
Were you saying something? I stopped
acquisition
because
for the new car.
yeah. So now what I'm really going to do, I'm going to combine these two processes together.
Disconnected.
I'm going to combine these two processes together. So what is going to happen now? Instead of finding a new buyer for my old car, I will sell the old car to the showroom where I'm going to buy a new car. Get me?
Yes, this is the barter.
Yes. Accordingly, what is going to happen now? First, I need to dispose this. So I will transfer this to an account called disposal account. So no need to balance now. We will wait as it is. So then I will open one more account here.
Gain and loss.
Disposal account. I credit to motor vehicle account and I debit to
Disposal.
disposal account. And here my description of the entry is motor vehicle. Now, am I going to receive cash?
Yes.
No.
Oh, you mean?
Remember,
Okay. Okay.
I am
You're
not going
giving
to
the.
receive cash now.
I
Instead,
see. I
I am
see.
going to receive a new car.
Okay. Okay.
Okay. So now,
Okay.
now you will don't confuse now. Now, instead, if I receive cash, where should I debit?
A bank, definitely.
In bank. But here
Yeah.
I am not going to receive cash. Correct?
Yes, correct. Now it's clear because it's one
I
dealer.
am
That's
going
one
to receive a vehicle, and I
new
am
car.
going to receive a credit for this.
40 or 40 K.
Yeah. So this 40, I will credit here, and I will again debit to
Vehicle. Motor vehicle.
motor vehicle. Don't get confused for this.
No, very clear.
Okay. So now this is disposal. Now I like to explain something here with regard to this particular account. This account. I made it very simplified example. But when you really face questions, this will have more complications, such as you will have depreciation, such as you may have
Yes,
revaluation
yes.
adjustment, all
I
this.
was going to ask you about it actually, if we have any
Okay,
depreciation. So
so I did deliberately avoided all this in order to make you understand only this concept.
clear.
Okay, so later we're gonna have a standard called IAS 16. We're gonna discuss that. There we will discuss all about the nitty-gritties of the asset management. Clear?
Yes,
Good. Now, how much more cash I need to pay to the showroom?
60.
60. So what will I do now?
So here
Cash
the cash will impact. Yeah,
60. So you see the total of this, how much?
100,000.
100,000. And if you balance this account now,
Carried.
carry it forward, how
Carried
much
forward.
will be there?
60.
No, Habibi.
Mm-hmm.
In the soup, yani.
Okay, I got it. That will be 100. 100.
Exactly. The balancing figure
Yeah,
is
great. Yes, noticed that one. Okay.
100,000. Technically, it should be 100 only, right?
Sorry?
Technically, it should be 100 only because
Yes.
I am giving away a vehicle worth of 40 and I am receiving a vehicle worth of 100. And I have dealt with the 40 with disposal, and then I'm paying the additional money in order to balance and to compensate the difference to the vehicle showroom. Is that makes things very clear?
Yeah, clear now.
Okay, now I will bring one more small complication here. Now this number is, we call it net book value.
Okay.
That is after depreciation, what was the asset value at the time of disposal.
Okay.
Okay, but this number is the value we agree for exchange. Sort of, we call it
Sales
sale
value.
proceeds
Yes.
or sales exchange. Okay, now is there any rule in a book that the net book value and the sales proceeds should be equal?
No.
No need, right? Possibility that it could be even less, could be 25.
Correct.
If that is the scenario, and if you balance this, you will end up having a difference.
Which is
How
in gain
come?
loss.
Exactly. That will
Yeah.
how much is that?
15.
15. You see the result is coming on the credit side. So, and I need to transfer this to profit and loss. And on the profit and loss, it will be on the debit side or credit side?
It's a loss, so it's going to be in credit side.
It is a loss.
Yeah.
So, this possibility is always there.
Okay. Clear.
Understand me? So,
Yes.
this is one scenario to explain you all with regard to, okay, no problem. Non-cash consideration. So it is a fair value of consideration. If fair value cannot be estimated, then what you do? You go to see the standalone selling price of the goods or services. If you are unable to find the market value, then what you do is that you work out the standalone price from the shops. Clear?
Yes, it's clear now.
Very good. Consideration payable to a customer. You could agree a credit. You could also agree a voucher. You could also agree a coupon, or even you could reduce a transaction price from another transaction. As I told you, now let's say mobile phone. Now Samsung S24 Ultra is in the market now, or you need to pre-book now. And there is a big who has to artificial intelligence and then 30 plus language can translate and all that story is going on.
Yes.
Now, a person with an old phone like S22, he needs S24 now. So he goes to this mobile outlet and he also asks whether, do you have this exchange offer? They say yes. And that is what I'm trying to mean here. So what they will do, they will reduce a given amount of allocation for the old device against the total value of the new device.
Okay.
So that is particularly about this. Allocate transaction price to performance obligation. Now we discussed that the objective is to allocate the transaction price to each performance obligation in an amount that depicts the amount of consideration to which the entity expect to be entitled in exchange for transferring the promised goods and/or services to the customer. You remember the example yesterday we talked about photocopy machine.
Yes.
And then the 27,000, we now allocated 18,000 to the machine and 9,000 to the
services.
maintenance.
Yeah.
So, so that's what we are talking about. Use relative standalone selling price basis. Now, see in that example, total price came 27,000. How I find out the breakdown? 18 and 9. If you happen to buy only the photocopy machine on standalone basis without a bundle service arrangement, you may have to pay how much?
18.
18. So then accordingly you find out the difference. If not directly observable, estimate the standalone price. If you are unable to know, now in this example, you go to the photocopy showroom and you ask him, my friend, I only need a machine. I don't need the services. How much you will charge me? If that man says, no, sir, we cannot do like this, we only giving you total, then you got to use your professional judgment. You need to estimate the standalone selling price at an amount that would result in the allocation of the transaction price meeting the allocation objective. It should be fair, in other words.
Yes, clear, very clear. When we divided the 9,000 to 3 periods, that's
Yes.
what you're trying to say.
Adjusted market assessment approach, expected cost plus margin approach, residual approach. These are different approach. Market assessment approach, expected cost plus margin approach, residual approach. I hope you all know the meaning of these terms, or you want me to elaborate?
If you may, I'm
Yes.
That's not familiar to me.
So let's say market assessment approach. So what is market assessment approach? You carry out a market survey. Carry out a market survey and then arrive a possible selling market price. Possible market price. Accordingly, you arrive a price. This is first step or first method. That is market adjusted market prices. Now, after getting the market price based on the various inflation or other economic aspects, you need to adjust the market price. Understand me?
Yes.
Then secondly, expected cost plus a margin. Do you know that?
No, I don't know.
How many of you have knowledge studying costing? Costing.
Yeah, I
So
have
here,
written for the costing.
yeah, so here there's one topic we talk about pricing.
Yeah.
In this, one method of pricing is cost plus. So what we do is that we take the variable cost. I hope all of you know what is variable cost is.
Yes, I know.
And then we also take the fixed cost. So this will give you total cost. Now, let's say, for example, this is 60. And the owner wanted to have a profit of 40. So this 40 is the
Margin. Yeah.
margin. And the total here, 60 plus 40 comes to 100. And that becomes
Selling price.
selling price. This is what we call total cost plus a margin. So cost plus.
Clear.
So this is the second method. Third one, residual approach. So what is residual approach now? When performing any pricing exercise, so what happens is actually 1 second. So, you see, if I will buy the product, if I will buy the product now, brand new, I will have a price. And if I will buy a product now, used, I will have a different price. So, the meaning of the residual approach is, what would be the price that I may have to pay when the product is available at any given age? What should be the residual amount that we should be paying? The residual amount to be paid at the time of buying the goods and or services. Is that clear?
Yes.
So this is residual approach. Now we also talk about allocating discount. When bundle of goods and services sold, allocate to all unless related to single item. See, if you are giving discount, and if you are that discount is related to the bundle of goods and services, then you allocate to all of them unless it relates to a single item. Proportionate allocation basis relative standalone selling price of the underlying distinct goods and services. What they say. Now, let's say in this example, 27,000, machine 18,000, services 9,000. So 27,000. Now let's say you give a discount of 10%. So 10% will be 2,700. And this 2,700 should be apportioned to both of them. Unless if they say that the discount is only to the extent of machine. Then what will you do? You will only subtract here 2,700. Otherwise, it will be 10% 1,800, 10% 900. You understood what the calculation I have done?
Yes, clear for me.
Very good. Mr. Zubair also clear, right? So, recognize revenue as you satisfy this performance obligation. Recognize revenue when the entity satisfies a performance obligation. So, this is performance by transferring a promised goods or services and asset to a customer. You may transfer a promised goods and or a service to a customer. Goods and services are assets. Even if it's only momentarily when they are received and use do not do, an asset is, and use. Do an asset is transferred when the customer obtains control. Please understand this term. I discussed yesterday this. You will only recognize an asset in your books only when you have the.
You have the assets. Yeah, you obtain the
You
assets.
you have the control.
Yes.
You have the control. What is contract cost now? Incremental cost of obtaining a contract cost incurred to obtain a contract that would not have incurred if the contract had not been obtained. You understood that very English?
Not that.
Okay,
Not
let
that
me
level.
elaborate. Let me elaborate. Now I'm going to sign up a contract. Contract agreement. If you signing it, meaning
Obligated.
you are committed.
Obligate. Okay.
Yeah, obligatory, obligated, committed. You could use different words, but the meaning is same.
Exactly.
In the contract, suppose, let's say, they say that you need to have 15 staff members. Each need to pay 2,000 riyals. So now this 15 into 2,000 will be how much? 30,000, right?
Yes.
If you don't pay, or if you don't want to pay this, and will you be complying with the contract?
No.
No. Then will the contract be smoothly running?
No.
So this will be part of the contract cost. This is an incremental contract cost. What they are saying is that any cost that if you avoid all costs which are unable to avoid when implementing a contract. When implementing a contract. All costs which are unable to avoid when implementing a contract is incremental cost. Understood?
Yes. Clear.
From a costing point of view, we also have a different interpretation for incremental cost. Let's say I'm producing 10 units, my cost is 120. And I'm producing 11 units, my cost is 126. What do you think? How much is my incremental cost?
6. Cost 6.
Excellent.
Cost.
6 is
Yeah.
incremental cost is 6. Meaning
Yeah.
the additional cost that I need to pay for producing one additional unit.
Correct.
So these two ways we can elaborate that. So examples here, direct labor, direct materials, allocation of course that relate directly to the contract or to contract activities. Now I gave you one example, staff or labor, and that is falls under the example of direct labor. And cost of contract management and supervision, insurance, and depreciation of tools and equipment used in fulfilling the contract. Now, suppose I'll give you two scenarios. You tell me which is incremental cost.
Okay.
We are signing up a contract. To landscape. Okay? And we
Okay.
need two equipments. One equipment already available with me. Already available, but idle. Second equipment not available, need to purchase. Need to purchase. Now suppose if you see device that is not available. If you tell your contractee that I'm not going to buy this, then will you be able to smoothly continue the contract?
No, because it's
No. Then the purchasing of this type of equipment becomes an incremental cost. Whereas already I have one
idle,
machine
which is idle.
which is idle, of no use. Now if I use in this contract, or if I don't use in this contract, will that be any cash flow impact for me?
Again, sorry, I didn't hear you well.
See what I'm saying, this machine is sitting doing nothing, idle.
Yeah,
Even if you signed up this contract, or even you did not sign up this contract, yet the machine is available.
correct. This is the contract.
And
That's
if,
it.
yes, and if you taken this machine and using it in the new contract, will that have any cost implications?
In a new contract?
But when I would rephrase it, will that have any incremental cost?
Okay.
You are using it or you are not using it. Will that have any change to the machine?
No, it will not have the same.
There
because it's
won't be
idle,
any
is it?
opportunity cost.
Yes,
There won't be
yes,
any opportunity cost. Or there won't be any incremental cost.
yes.
So that is the difference. Here they talk about supervision, insurance, depreciation of tools and equipment used in fulfilling the contract. Costs that are explicitly chargeable to the customer under the contract. In this example, the second item. The second item you can charge directly to customer. Charge to customer, correct?
Correct.
But the first item you cannot charge to the customer.
Because it's idle.
That is sitting, doing nothing.
Okay.
Other costs that are incurred only because an entity is entered into the contract. So this is also relevant. Because you signed up a contract, you had to end up in having additional expenses. Like for example, you need to set up a shade outside your office because you have signed up a contract. Then the cost of the shade becomes an incremental cost. If you have to buy computers, if you have to hire a security guard, or whatever the activities that you will perform simply because you have signed up the contract, all those costs of these activities become incremental, relevant cost. Fully clear?
Yeah, that's clear.
MashaAllah, Mr. Zubair.
Yes, sir. Yes, sir. Now I
MashaAllah.
arrived by home because before I was driving.
Okay, no problem. Now, so you're going to have a very nice meal. And that smell will come to me and my hungry level will increase. So we should also have a virtual dinner.
Yeah.
You know,
Once you
sitting in
visit, we will have,
places.
inshallah, original dinner.
Yeah, definitely. I'm waiting for that. Next time I'm visiting Riyadh, the people that I'm going to meet, both of you.
Inshallah, why not? Inshallah.
And reverse also applicable. If you happen to come to Qatar, I'm the first person to talk.
Inshallah.
Okay, don't forget me.
Of course.
Yeah, of course.
So then disclosures. What are the items that you need to disclose in your financial statement? Revenue recognized from contracts with customer, including any disaggregation of revenue into appropriate categories. What are the categories? Under which are the categories that you're going to share or disclose your revenue? And this will go to P&L. What do you mean by disaggregation? Showing in breakdowns, breakups. Contract balances, including the opening and closing balances of receivables, contract assets, and contract liabilities. So this also you need to show. Performance obligations, including when the entity typically satisfies its performance obligation, and the transaction price that is allocated to the remaining performance obligation in a contract. So that also needed to be disclosed. Significant judgments and changes in judgments made in applying the requirement is to those contracts. So what are the judgments? What are the experience? What are the knowledge the preparer carries on related to the revenue recognition? You got to talk about or disclose this in your financial statement. Assets recognized from cost to obtaining or fulfill a contract with customer. If these items are clear for both of you, my friends?
It's clear from my side.
Very good, mashallah. Summary.
Yeah.
Step 1, identify the contract with customer. Step 2, identify the performance obligation in the contract. And then contract for combined contracts. You may have performance obligation 1, performance obligation 2. This I would write bundle. Then transaction price for the contract, transaction price allocated to performance obligation 1 and the transaction price allocated to performance obligation 2. So you recognize as revenue, and this will go to P&L. Step 3, determine the transaction price. Step 4, allocate the transaction price to performance obligation in the contract. Finally, recognize revenue when or as the entity satisfies the performance obligation. Is that clear, all of you?
Yeah.
So with this, IFRS 15 is done. We will now do some questions and then we will move on to the next standard. But give me like 3-4 minutes, I'll get back to you.
Sure.
Hello?
Hello.
Yeah. We will now try these questions.
Okay.
Which of the following is not a step in the 5-step model of IFRS 15?
Okay. Identify the contract as not sure. Determine the contract its part.
Yeah. So
Determine the transaction price. It's part of the 5-step.
correct.
Okay. Identify the performance as well. Measure
Yes.
the extent to which each obligation has been satisfied. Recognize revenue. Okay. Recognize revenue. E, that's also part.
Yeah. So as I
Yes, sir.
told you, you have to remove the incorrect answers.
Mhm.
So then we will left with some minimal options.
Okay. I can say
Looking for a pen here.
Performance obligation.
So is this an answer?
no, the answer will be
No.
D.
Okay.
Not
What about Mr. Zubair?
Yeah.
D is the answer.
What is D is the answer.
Yeah, D.
Very good.
D.
Yeah, that's correct. Now we go to second question.
When should revenue be recognized for yourself?
When the goods are shipped.
No. When the goods.
When the customer pays.
D, I think. Okay, let's exclude the
Yeah, let's
incorrect
exclude.
one. Yeah.
What are the answers I shall exclude?
When the goods are shipped to the customer.
When the
Yeah, this I will exclude.
Yeah.
And when the customer pays for the goods?
D, I think this is the correct answer. I'm just.
Answer. What about Mr. Zubair? Mr. Zubair, what do you think?
Although C is correct as well, but I think more
No, see, no, we talked about something called
substantially.
substance, not the
Yes.
word substantially. It's totally different meaning. Huh?
Okay.
Substance and substantially is two different meaning.
Yeah.
I would also add one more word here.
commercial.
So then if you need to consider commercial substance, then will that C be answered?
Commercial substance. Commercial, yes. This is C will be the answer.
No, can't be. No, they talk only about legal ownership.
Documents, which is the legal forms.
Yeah, but we sometimes we need to accept the commercial substance, although we don't have the legal ownership.
I see. So it's the okay. So I think D is the
So
Then D.
can C be answered?
Sorry?
Can C be an answer?
Yeah,
No, we said
B, I think. Sure, B.
So C cannot be an answer, right?
Yeah, yeah.
Fine. And my voice is audible?
yes,
Yeah,
no,
no,
it's
it's very clear.
better.
Okay. Alhamdulillah. And what about now we are fighting between B and D.
Yeah,
B also incorrect.
So as I said, D. So yes,
oh,
See,
D.
so
it is
D, we are
D
not.
is the answer, but I have one argument here.
Mhm.
Mm-hmm.
But, yeah, what is the argument I have? In this question, they
Strict.
have talked about risk and reward. Actually, the risk and reward is coming from the standard IAS 18.
Oh,
Okay.
But if it's really IFRS 15, that should be controlled.
Okay.
If in a different question, you have two options. One is risk and rewards, other one is control. You should choose control only.
Mm. Okay.
Answer is D.
Yeah.
Get me? You understood the logic behind this?
Yes, yes.
Good. Now let's go to question number 3. How should a contract with multiple performance obligations be accounted for? We just discussed it.
C. C. I think C is the C.
It's
The transaction price should be recognized as revenue
Yeah,
when
C,
the
C.
customer C.
C.
brothers, please read the question. They are asking about multiple performance obligations. They don't ask about how you recognize the revenue in total. Now, what they try to mean in this question, in that photocopy machine example, you have 27,000.
Okay.
How are you going to recognize the revenue from machine, revenue from service? How you know that is 18,000? And how you know this is 9,000? What was your basis?
So they, reveal this.
Pardon?
I said till they reveal this. I mean,
Yeah,
I will
in
not.
this example, they reveal it. How otherwise, in a real practical situation, for a practitioner like us, how we will find out? Now, in this example, I told you, and what I told you, if you had to buy the photocopy machine alone,
Yes.
then that machine cost will be 18,000. See, I use the word alone, don't I? So what is the most appropriate phrases here that is talking about the alone price?
Should be allocated to each of the based on standalone price, which is the first one.
That is the answer actually.
Yeah.
So Your answer is
A.
A. And you see, this price is
Combined.
bundle
Bundle.
price.
Yeah.
Okay, and these two are the prices for standalone.
Standalone.
Yes.
And these two also can be known as variable consideration.
Yes. Yes.
So answer is A. Which of the following contract is not within the scope of IFRS 15? Simple question. Difficult answer.
Provision of service.
Which of the following contract is not within the scope of IFRS 15? What do you think?
I think lease agreements. That the lease agreements is not part of what we have said.
See, sir, lease agreement has a word agreement.
Okay.
Agreement is something to do with
Contract. So sorry, finance.
contract.
Finance lease. Yeah, finance lease.
Finance is the answer. For finance lease, we have a separate standard.
Yeah.
If you ask me a question, the finance lease, don't we have agreement? My answer is no, they also have agreement. But they have a separate standard,
IFRS
IFRS
16.
16.
16. Yes.
We will discuss that in a separate session.
Okay.
Fahamtu?
Yes, very clear.
Very good. Question number 5. How should customer refunds be accounted for under IFRS 15? I will give you a little more
Your voice is gone, Mr. Muhammad. Hello?
This is 1 January. Pardon?
Yeah,
Hello?
we lost your voice just for a while.
Yes, sir.
Yeah, we lost your voice just a couple
You
of
watched,
minutes.
you hear me or no?
I can hear you now. I can hear you now.
I know the reason. Wait. Hello, can you hear me now?
Excellent.
Yeah. Good. So I just want to give an elaboration to that question. So we signed the contract on this date. So this is 1 January 2020. This is 1 January 2021. This is 1 January 2022. Now today, I signed up an agreement for 1, 2, 3 years, right? So total contract value is 750,000. And we have completed the performance obligation for 1 year. And I have invoiced 250,000 I have invoiced. Today, I'm like somewhere here. Let's say 1st of March 2020. When I'm where? 1st of March 2020. Today I'm receiving some refunds. Oh, sorry. We are giving some refunds. On this date, we are giving some refunds to customers. Now the question is, how you should treat this? Now these refunds actually relate to the entire contract, and customers have paid 250. Now you are refunding some money. How you treat it? That's the question they are asking. According to IFRS 15, what must I do?
Okay, we received the amount. That's revenue. So
yeah, I have already recognized that 250 as revenue.
Khalas. Okay, now we're
but my
refunding.
total, see, my total revenue how much? Sorry, total contract value how much?
750K.
750. And I have received how much?
250.
250. Now in March, let's say I received like 20,000. Oh, sorry, I refund 20,000.
Refund, yeah, yes.
Yeah. And how am I going to manage this? How am I going to record this is the question now.
Okay. As an adjustment in the transaction price? No, none of the above. So I will exclude C and D.
You will exclude C and D. Okay, I will go with D. I will accept D, but I need to talk about C. As an adjustment to the transaction price of the contract. What is the transaction price of the contract in total?
750.
750. Why we had to refund money? We felt that the total price we agreed is little more than what it's supposed to be. And to keep the customer happy, we refunded some money.
So adjustment.
So adjustments, yeah.
See, so it doesn't mean that they paid more in the first quarter or first year. So this is to have a very friendly, good relationship, a gesture of good relationship. You have refunded 20,000 to the customer, and that will reflect the total price. So therefore, your answer will be
C. Okay.
So is that clear, or you want me to explain you anything more?
It's clear.
Yeah.
Very good. Can you go to the next question? A software company licenses.
The slide is gone.
Pardon?
Okay. Disappeared.
A software company licenses its software to a customer for a 2-year period under IFRS 15. The revenue should be recognized. The revenue should be recognized.
Okay.
Can we eliminate the wrong answer?
Okay, I'll try to.
B.
Should that be upfront at the beginning of the contract?
We received the total amount, or the
No, no.
Yeah, we
transaction
received the
price.
Because
company,
2 years.
a
Because it's
software
2
company
years.
Okay.
licenses software to customer for 2-year period under IFRS 15. The revenue
So,
should be recognized, and see, although it is silent, you got to make an assumption that the revenue, I mean cash, has been fully received.
so relatively over the 2 years. This is the ideal answer I can see. As we will not,
Yeah.
actually.
So that's the only answer. There's no other appropriate answers, right?
No.
So
Only
this is
when
wrong. This
this
is
one.
wrong. This is also
Yeah.
wrong.
Yeah,
Excellent.
B.
BB, right?
Yes,
Habibi,
Don't
yes.
start
BB.
either.
Okay. Question number 7. A construction company builds a custom home for a client. The contract price is based on progress milestones. How should revenue be recognized?
Okay.
Construction company the contract price based
As okay.
This is a very logical question and a very easy answer.
Very easy answer. Yeah. I guess it's B, but let me
B.
just
B.
B.
Yes, it's BB, Habibi, everything.
Yeah.
So, this also, there is one of my teachers used to say, it is easier, sorry. How will I erase? Okay. It is easier than eating peanuts. I hope all of you know what is peanuts, right?
Yeah.
And then when he's discussing questions, he will always use a phrase saying that this question is easier than eating peanuts.
Piece of cake. That's really.
Piece of cake, yes, piece of cake. Yeah, that's another phrase.
Yeah.
So what is the answer?
Okay, we'll recognize the revenue. Let me see on the company provides services. Okay, I'll eliminate the A.
Yeah, you will eliminate a Mazboot.
Okay, at the end of the subscription period, also I'll eliminate this one.
Kolas, Yalla, Ru, Balla.
Yeah.
P.
Okay, relatively. So it's going to be C already. No, once the service provided, so it's going to be D.
Only when the company provides support services to the customer. See, a company provides ongoing customer services as part of a subscription contract. When
Okay,
should revenue be recognized?
I got it now.
See how they are trying to be tricking you?
Yeah. So so it's C then.
See,
Ongoing, that's going to be C.
sometimes, I don't know, you all have faced experience with these subscription based services like Netflix.
Okay, yes.
You have Netflix subscription, you don't watch the TV at all, but they will disconnect once that term is over.
Yeah.
Can you go and argue, my friend, I was in Sri Lanka, that time I didn't watch?
No.
Tabiada, Sunada in Tamaskara, they will ask you.
Okay.
So that is what exactly the logic behind this. Question number 9. See, now one additional thing I wanted to tell you, when we discuss the theory, I am taking some additional time deliberately to make you understand better, so that when we answering question, inshallah, we will not face any difficulties.
Correct.
This is what the way that I am trying to work on. So far, I believe the amount of question we have discussed, you understood that particular circumstances.
Yeah.
So let's try question number 9.
Oh, that's tricky question. Okay.
Now, do you know the concept behind this?
Yes, there is a right of
Say
return.
no return basis.
Yeah.
Some car showroom, not the brand new car showroom, the used car showroom have this practice. Experience? You have experience?
I mean, anything will be, sold usually has, the right to of return, to.
Yeah, they will say that, my friend, okay, bring your car and park here. If I find the customer, we will sell for it.
Okay.
This is a normal arrangement. But here, you go with an additional agreement. Like, for example, you are selling milk powder, okay?
Mm-hmm.
Or you are selling cake. Now,
There's no right of return.
yeah, that's what I'm going to talk about. Let's say milk powder. You refill the shelf of a mall, and you make an agreement with the mall people. Look, my friend, I have filled milk powders which has a shelf life of 1 year, for example, or 6 months, for example. And if you don't return to me these milk powders within the next 3 months, I will then consider that you have purchased the milk powder for you. This type of arrangement, have you come across?
No.
This is one normal scenario. That's where you have the sale or return basis. So the seller will deliver their goods to the buyer. At that time, there is no arrangement for sale. But they will say that, look, if you don't communicate to me within this many days or this many weeks or this many months, we will automatically presume that you are taking the control of the goods.
Okay.
So accordingly, what you think the most appropriate answer?
D.
Obviously, D is the answer. No more questions needed.
You remind me with the subscriptions. When
Pardon?
you have you remind me with the subscription when you have 7 days trailer. You know what I mean?
Yes.
So if you exceeded the 7 days, or you paid the whole amount, or the full amount, and when you exceeded these
Correct.
7 days, they will consider that you have, you have the license, or you use the software, for example.
Of course, yes. This is the last one. Last but not the least. A company charges a non-refundable deposit for a service that will be provided in the future. When should be revenue recognized?
Non-refundable deposit. So that's
They are
mean,
saying non-refundable deposit, yes.
yeah.
That will be provided in the future. When should revenue be recognized?
Okay. Provided.
It's again little bit of a tricky involved here.
Yes, but the contract says non-refundable, so there is no obligation that, or let me say,
Meaning,
meaning
no
is that
obligation to refund
exactly
the funds,
deposit.
but
Yeah.
when how the contract is arranged? Is it the contract is only for 1 year? Is it the contract is for 3 years? Is it the contract is like ongoing? That is another little bit of a tricky situation. So we are missing some additional information here. Missing
Period.
some
Duration.
additional info. So what do you think based on now leaving this missing information based on the available data? What do you think the most appropriate answer?
Okay, I will eliminate A.
You will remove it.
Yeah.
خلاص ما يروح برا.
C as well.
خلاص ما يمشي.
Okay, and also D. So I think B is the at the time they said
B for ball or D for doll?
no, B for ball.
You will, that is your answer?
That's my answer. At the time the service is provided.
Mr. Zubair, any other thoughts?
The answer seems B, but because if there is a terms and condition of deposit, then definitely I think we have to check. So I think both are correct, but I'm not sure. But B for me is okay.
See, you both have said B, but actually answer is D. I'll tell you why. We discussed that, we said that there is some information is
missing
here. We really don't know how and when the services they're going to put. So to recognize this refundable deposit, suppose let's say you receive 1,000 and this 1,000 this is for the next 5 years. We are sure, of course, we will not repay this 1,000, but we need to continue offer the services for the next 5 years, right?
Correct.
Then how I should recognize the revenue? Every year 200. Clear?
Yes, clear.
In this situation, what you will choose?
D.
It will be this B. Yeah.
It will be D for doll and B for ball gone.
Yes.
Yeah.
Clear? So with this, I'm done with the question. Also, I'm going to tell you one more information. Actually, two more information. I don't know whether it's a good news or a bad news. 30 and 31st, meaning tomorrow and day after tomorrow, most of us are busy with the year-end, month end.
Correct.
So, meritphase is very generous and saying that they can give this to us holiday.
That's
So,
fine.
what do you think? Is a good news or a bad news?
It's a good news. We are
Yeah.
also closing the month.
Yeah.
Yes, it's a good news. So that is information number one. Information number two. At the end of the theory discussion, I will also come up with uh, baskets of questions specifically coming from ACCA. These questions are not by ACCA, but for certificate in IFRS.
Okay.
Understanding. So
Yeah.
also I want to give you another bit of a hint. By seeing this type of question, don't be too much comfortable. The real question may be even little more tougher. So before I allow you to go to the exam, I will be discussing substantial amount of same standard questions coming from ACCA basket.
Okay.
Clear?
Yeah, clear.
Okay. Now let's look into the syllabus. Yes, sir, Mr. Subai.
Yes, sir. Yes.
Okay. So let's look into the syllabus now. Syllabus I have shared here. Is that right? Syllabus is syllabus is here.
Sorry, Muhammad. Can I know exactly when
Yeah.
we're going to, end this session today?
See, my initial arrangement with the merit phase is to complete with 40 hours.
No, this session today's session. Is it?
Today, you have any
Yeah.
you have any limitation? Let me know.
Yeah. At 8:45. That's the.
Okay, so we will stop at 8:30.
As you like. That's
Yeah,
cool.
no problem. We will stop at 8:30 and then we will cover it up accordingly. Not a problem.
Okay. No problem. Thank you.
See, we have so far done with this topic number one is done. Topic number two also done. In topic number three, we are done with this. We are done with this. Now I will be moving on to IAS 8, accounting policies, changes in accounting, estimates and error. And allow me 2 to 3 minutes off and then I will join. Okay.
Sure.
My team has made some tea, so let me enjoy and come back.
Okay. Enjoy.
And I will request the same for you guys.
Okay. No problem.
Hello.
Yes, hello.
Yeah, guys, I'm back. Today, now we're going to continue with IA6. Accounting policies, changes in accounting estimates and errors. Before I go to the standard, I would like to give you some background of this standard. Let me share this. They talk about accounting policies, changes in accounting estimates, and errors. You need to have a good grip of these terms. There are three terms here: accounting policies, accounting estimates, and errors. Now let me first work out accounting policies. Guys, you are hearing me, right?
Yes, yes, I can hear you. Yeah.
Okay. So accounting see how the accounting policy is getting developed. Accounting policy developed how? Starting with something called accounting concepts. Starting with something called accounting concepts. Now, we discussed many different concepts. To name a few, business, entity, concept, to going, concern concept, 3, accrual concept, and so on. So there are various different types of accounting concepts. Understanding.
Yeah.
The companies, when they started to do their business, and when they continuing their practice, and when they're setting up their accounting framework, first thing they need to do, choose the right or follow the right accounting concept. So all this, although I have written 3, doesn't mean only 3, yeah?
Okay. Only
There are so many accounting concepts. So one of the exercise the entities must do is to adapt with accounting principles, concepts. See, these two terms are same meaning. Huh? Is the principles of concept is to be interchangeably used. And also there is something called, so now you understood we need to adapt the accounting concepts. Fine. After adapting accounting concepts, we also need to follow something called accounting basis. What is accounting basis? Now, good example, depreciation. Depreciation, you have two methods to calculate the depreciation. Straight line method, reducing balance method. So do you see that there are alternative methods in calculating the depreciation? Do you see that?
Yes.
So when you happen to see the alternative methods for a treatment of any accounting item, these are known as accounting basis. Get me?
Clear.
Yeah. And also another example, inventory. FIFO, weighted average. So after accounting principles, concepts and accounting basis, one, chosen and practice, it becomes accounting policies. You understand me?
Yep.
So one of the requirements of the IASA is to ensure that every entity must have their own accounting policies. Must have their own accounting policies. So when you happen to prepare your financial statement and when you disclose your notes, one of your notes is to talk about accounting policies. One of your notes is to talk about what? Accounting
Policies.
policies. So standard, yeah, the first point is that we will have to talk about accounting policies. Now there is something called accounting estimate. One important point here, accounting estimates are not accounting policies. Accounting estimates are not accounting
Policies.
You know what is an accounting estimate? Let's say I have an asset. The cost of the asset is 12,000. And the management says this asset will last for 4 years life. So the estimate is what? The lifetime. So this can be also 6 years. This can be also 10 years. Understand me?
Yes, clear.
So accounting estimate is just an estimation developed by the management based on their experience. And the thirdly, errors. Errors can be two types. There's one thing called fundamental error. Very serious error. You cannot really, excuse him. Ordinary errors. So the fundamental error is very serious. One example of fundamental error, an accountant ignoring the impact of a theft. He has seen storekeeper every day going home taking one bag of rice. Good practice or a bad practice?
I couldn't hear you.
What I'm saying,
Yeah. Okay.
the storekeeper. Okay? Let's say it's a hypermarket. It's a hypermarket. Storekeeper in the hypermarket every day evening when he go home, he takes one bag of rice without knowing to the company or the business or the management. Good practice or a bad practice?
Bad practice.
Very bad practice. But this accountant has noticed it. You know, our accountant has uncovered this at the end of a month, for example. So this amount of theft the storekeeper has done, do we need to bring it to accounts or no need?
If we, sorry, what?
No, the amount of the theft that the storekeeper done, should I need to incorporate into my books of accounts or no need?
No need.
Habibi.
Okay.
So the you don't need to report that in the financials that
No,
this amount is theft.
no, of course, that's supposed to be, supposed to be, let me say, recorded in our books.
Correct. But if this accountant has ignored or missed out or omitted, can you excuse him?
We have to record it as well.
That's what I'm saying. Now,
Yeah.
the accountant's job is to record the transaction, and he
Exactly.
uncovered that there is a theft.
There's a tip, or I couldn't
There's a
there's a
theft.
tip. Okay, theft.
So he uncovered this. He found out, but he kept on silent. He didn't record that. He didn't pass a debit and credit for this.
No, it has to be recorded. Yes. Okay.
Exactly. So if he is keeping silent without doing the double entry, could you excuse him? Okay, Malish,
No.
mushkil. Can you do this?
No. 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 No.
This is a very serious error. This type of
Yeah.
errors are known as fundamental.
Standards.
No, fundamental errors. This type of errors are
Okay.
known as fundamental errors. And the
Okay, I
second
see.
type of error, can you see this?
Yeah. Ordinary errors.
Yeah, ordinary errors like, I will write an example. 25, 45, 10, and another 20. Now I'm taking the total. 5 plus 5, 10. So 10 is coming. 3, 4, 7, 8. So this is 25, 50, 70, 80, 100. So the answer is 100. But the accountant has written 110. So this type of errors
Calculation
are
error.
ordinary errors. So standard deals with how to treat the fundamental error and an ordinary error.
I see.
So I will discuss this in very detail in our next meeting.
Okay.
And and also remind you, tomorrow and day after tomorrow we will not be meeting.
Sure.
And as I requested you all, please do watch the recent videos I am uploading in the YouTube. That all related to IFRS discussion.
But the recording, you didn't actually share it. I didn't see it on the
I didn't get it yet. I will request our coordinator. So this
Okay.
they will share in the group.
Okay.
And in the meantime, what I'm saying is not about this recording. I have my own recording in a different.
Yes, YouTube. Yeah.
Yeah. Please watch that as well.
Exactly. Yes.
So, and I will try to. I said that I will be sharing something. I will make sure within the next 2 days I will be sharing those as well. Thank you so much, and
Thank you.
have a nice holiday for both of you.
And you too. Okay.
Yeah. Thank you.
Assalamu alaikum. Bye.
Alaikum salam wa rahmatullahi wa barakatuh.